Hello everybody, welcome to MoneyWorks. My name is Neil Mardian, Certified Financial Planner and Investment Advisor here in Medicine Hat. Thank you for joining us. Today we're going to talk a little bit about, well, we've got a special guest here. His name is Morgan Harrison, partner here at the EBT firm here in Medicine Hat. With it being tax time, we thought it was important to touch on some personal tax issues and some personal, maybe tax things that people sometimes miss. So Morgan, give us the insight. What's going on? What do people miss sometimes?
Some of the most often missed tax deductions, the first one really is interest on funds borrowed to invest. That doesn't include your RSPs and your tax-free savings accounts, obviously, but it does include things like if you borrowed money to buy a rental property, not just that mortgage on that rental property, but also the money if you borrowed against your house for the down payment. That would include stocks, obviously privately held stocks, bonds, mutual funds, those are kind of the obvious. But also, if you lent money to a private corporation or bought shares of a private corporation with some personal debt, you really want to look to make sure you're writing the interest off on that. The savings on that is up to, depending on your personal tax situation, but up to about 39% of the interest cost. Perfect. So it's quite substantial and really can add up. There's opportunities you want to look for if you do have non-registered investments and do have personal debt, for instance, a mortgage. In order to achieve that, you could sell the investment itself. It might not be as easy as it sounds, but you could sell the investment, pay down that debt, re-borrow, and repurchase if you didn't necessarily structure that right. Let's say the first time you did that. Okay.
Give me another one that some people miss on their deductions.
The charitable donations are a good one, and I think it's really important to keep that in mind. Personally, I do as I'm actually donating. For every dollar you donate to a charitable organization over $200, you're saving about 50% of the tax on that. So it's really substantial in Alberta. There's really two things you're going to want to watch for. That's to ensure that if you don't know the charity, make sure they do have charitable status. You can actually go to CRA's website, cra.gc.ca, to ensure that. That one's important. The other thing to watch for is donation schemes. Those are the ones where you're actually getting more of a refund back than you've contributed. CRA's really cracked down on these over the last few years. So it's important to kind of keep an eye out and be careful of those. Exactly.
Give me one more that maybe people sometimes miss.
One that's obviously pretty specific, but is a disability tax credit. This is something where if you're markedly restricted, whether it's hearing or seeing or walking or even our mental functions as well, it's important. There's some obvious ones where clients will know about it and do know about it. But it's surprising how often I'll hear about it after a couple of years, and we go back several years and claim it. And you can go back to when that disability actually started. Okay. You can go onto CRA's website again, and you can look for what what disabilities qualify. And then you do need a medical practitioner to fill out a form. It's called Form T2201, and your annual tax savings is somewhere around $2,500 plus. If the situation fits right, there is a registered disability savings plan as well, where the government matches some of the money that you put in. So it's really important to make sure if you do qualify that you take the steps to get that done.
Perfect. Thanks very much. So for MoneyWorks, my name is Neil Mardian. Remember, make sure you talk to a certified financial planner or a certified accountant, especially, a chartered accountant on this, to make sure that these are addressed for you and your personal financial planning needs. For MoneyWorks, my name is Neil Mardian. Thank you for joining us. And remember, people don't plan to fail. They sometimes just fail to plan.